Hey, good morning, everybody. So this is going to be the watch list for Monday, October 7th. So a couple things real quick. Looking at Monday, not too much is going on. Should be a relatively calm day. We do have consumer credit that's going to drop, but that's not till 3 o'clock in the afternoon Eastern time. So by then you should be done trading for the day because we're going to be approaching power hour. On Tuesday, really nothing other than the U.S. trade deficit, which will drop before the market opens. We do have some Fed governors speaking, but again, I'm not worried about them because they've been talking for the last 2 weeks nonstop. On Wednesday, you'll want to be cognizant of wholesale inventories that will come out 30 minutes into the market open. So do be aware of that. And then a lot of data Thursday and Friday. So Thursday and Friday, we're going to have jobless claims, the consumer price index, core CPI year over year. So that's the consumer price index. So is inflation moderating or is it going up? So you can see what it was year over year, what they're projecting, but inflation is clearly coming down, but the focus is now on the job market. And then Friday, we're going to have the producer price index. So is it costing manufacturers more or less to make goods? Obviously, if the producer price index is going up, what do they pass those costs on to? The consumer. So then we also have consumer sentiment. So definitely let's see how the market opens, but the most amount of volatility you're probably going to have is Thursday and Friday. Should be smooth sailing Monday through Wednesday. Let's take a look at some of the charts. So I'm going to start with SPY. Not moving any of my levels from the past. So you can see we have constantly, over the last several days, battling this 570 level. And it was being fraught back and forth on both sides. But as soon as they push it below it, they wick it up. They push it down, wick it up. Down, wick. Down, wick. Use it as support, 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 support. And then here, it got a little bit messy where we were back and forth trading below it, but then they were using it as resistance. But look at these huge wicks right again at this 570 level. So it opens and then we close right on the level. They wick it all the way down. And this is on a 1 hour time frame. Same thing with the next hour, the hour after that, hour after that, hour after that. This 570 is a very, very strong level that the market doesn't want to hold below it. So I've been doing a lot of my trades, my scalps, right around this 570. Now, I don't have a reject till we get up here between 574 and 575, which was the prior all-time market high. This is what I was watching to hit on Friday, and we never got up there. So you'll note that on the pre-market, we were moving up directly into it, very strong pre-market, and then we immediately sold off and just kept holding that 570 level on Friday before moving higher. QQQ, again, levels haven't changed here. Same exact thing. This 483 has been a very strong level where they were using it as resistance, support, 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 resistance, supporting it. And then look at all the resistance here. Constantly right around this 483, 483.50. There are a lot of wicking, so a lot of volatility in the market without a doubt. And then I have my reject up here possibly for Monday at 488.32. Why? Because we're on a 1 hour chart. We rejected heavy here. We rejected on the pre-market on Friday right at that exact same level. I mean, if the market would have opened 10 minutes later, that was a perfect reject all the way back down to this 483, 484 zone. So I'm going to wait. This will be my bounce. This will be my reject. If we get above it, I'm going to want to watch this zone, but I don't want to go long into the 490s until we can hold this area, seeing if we can push higher. A couple of things that we're going to look at. Last week, we looked at the energy stocks. This week, I'm going to look at two different ones where we're having sector rotational go into, which are the banks, as well as the airlines. But before I do that, I also want to remind you, be using Confluence Trading, where we're watching our SPY and our QQQ together. So SPY was actually stronger on Friday. We never got up to the reject level. But what did? QQQ literally rejected the level right before the market opened. So Then once it opened, it was just a free fall from there until they recovered it and then started to chase liquidity in the afternoon. Same thing with SPY. You could see we had the pre-market, and where did they draw the liquidity back up to toward the end of the day? Chased right back to that pre-market high. So always be watching these two together when you're in a trade, whether it's SPY or Q. Figure out which one is stronger, which one is weaker, because they will diverge, but only for a period of time before they come in lockstep unity. So let's look at a couple of the airlines. I think there's some momentum here. This is Delta Airlines. You can see we had this trend line. We checked back to the trend line on Thursday and then started to get a little bit of a bounce higher. Now, you'll also note we are well off the prior highs in this. So we're rejecting consistently up here at right around $60 a share. Well, it's trading right now at $50 a share. So I definitely think there's more upside momentum in the airlines, especially with Spirit Airlines potentially filing for bankruptcy, which takes a competitor out of the market. So Delta is one that's been one of the stronger airlines. I would look for this trend line to hold before you go higher. And then my target is going to be 52.36, the pivot. And then if we can clear that, 63.84, which is this pivot here, and then possibly back to 60. One of the other ones that I would keep an eye on is going to be United Airlines. So you can see with United that it was in this area of rejection on multiple times, and it is breaking out a bit higher. So it's starting to gain some relative strength. If we can hold this level right at 57.56, where we've retested off of it, and start to push higher, I definitely think there's opportunity here to head back up to this prior pivot, which we want to clear 60.59 and then go into the next pivot, which is 63.70. You'll note that we are still well off the highs where we had a lot of consolidation all the way up here at $93 a share. So I think there's some opportunity there as well. Let's take a look at American Airlines. It's been one of the ones that's been struggling the most, around $10 a share. A couple things that I like about this one, probably a little bit more than the others, is we have a gap fill here on a daily basis, right? So this is going to act as a magnet to pull the stock higher into the gap zone fill. The other thing I like with this one too is relatively it's an inexpensive stock, so therefore the options contracts are not going to be overly horrific. Look at where we rejected 11.98. On Friday's high, it pushed up to 11.97. It missed it by 1 penny. So we do have a small gap to the downside, but I would look for the continued momentum in airlines moving up. So American Airlines is one that I like. If we can get above $11.98 and hold that $12 range, I think what you'd be looking for is $13 and $14 calls. And then the next one that's had a lot of turmoil, a lot of management issues is going to be Southwest Airlines. Again, why do I like this one? It's because of the gap. So the gap was here, but look at how we've already pushed into the gap. What I would look for on this one is a retest down to the bottom, see if we could come down here closer to 30.50, and then going long with some calls in the $33, $34 call range, again with strong momentum. We have the MACD, it's pushing up. We're getting some buyers. We're also going to be coming into earnings, which is on October 24th. So I'd love to see these trades play out into earnings. Definitely would not be holding them through earnings, but something to consider. What I want to do real quick is I want to look at the banks. So let's take a look at Bank of America. You can see that Bank of America has been kind of trading within this zone over the last several weeks. Now, banks are going to start their earnings announcements this coming week. So we should get a really good indicator as to what is the strength of the consumer and overall credit. What I'd like to do here is wait for us to get a slight pullback to 38, 34. You can kind of see we're trending in this range here. But if we can break above the $41 mark, what I would look for is going back up to this pivot high at $44, which is still way below the prior all-time high where we almost had a double top here at 50 bucks. So I do like banks going into earnings. The jobs report was really strong, which means unemployment is not going up, it's coming down. As long as loan delinquencies are within line, we should see a rally in the banks. Let's take a look at Wells Fargo. Another one, this would have been a great buy area down here at $50 when it retested that level twice. This one is going to be a little bit more richer because it's had such a monumental move off the bottom. But what I would watch for here is a break of the overall trend line. So keep an eye on this, and I think that you'll have an opportunity, how we have this wedge here, right? We'll want to watch, do we keep backing into the wedge, or do we break above it, retest, and head higher? The next one I want to look at is going to be JP Morgan, probably the strongest of all the money center banks. I mean, it's just been on a crazy tear. You know, this one has been at an all-time high, which I'll be curious to see if they can push right back up into that level. We're still on an overall uptrend on this one. It's still moving directionally where it needs to be going, right? So let me just line that up. A little bit of a dip. I want to get above this trend line for a push higher. Now, these are going to be more expensive, so you're going to be better off probably playing a Bank of America or a Wells Fargo because the stock is cheaper. But this one, the MACD is starting to curl up. It has earnings. It's going to be highly anticipatory that they are going to beat and do exceptionally better. But this one could also potentially, if they don't have the earnings that the street is looking for, then watch for a push back to the downside. And then where I think valuation comes into play that's more reasonable is right around here at 191. So that could be possibly a put entry if they disappoint on earnings, because this thing is trading at 2 times book value versus the other banks that are at 1 or 1.25 book value. Citibank is only trading at 0.75 of book value, tangible book, and that's how we value banks. So you can see on Citi, I had a couple bounce zones down here that have played out. This one is right at a point of, what are we going to do here? Are we going to break higher than the prior pivot? It's just been consolidating here. And if it does, this gap is already filled. There was a little tiny gap here. Then I think Citi will have some opportunity to push up into these prior highs, 66, 67, which is a good 8% move. And overall, we're kind of at a balance of supply and resistance. But definitely, I think the airlines and the banks are going to be your 2 go-tos. Probably have some more upside potential in oil, but technology, I think what we've been watching over the last several days is they've been fading technology and moving into the more broader components of the markets. So with that, those are kind of some of my thoughts for Monday, October 7th. And as always, if you have questions, feel free, shoot me an email, options@billfanter.com. You go to my website, the email address is there as well. And happy trading, everybody. And can't believe it's already October. We are in the final 3 months of 2024. So with that, we will talk again next weekend. Have a phenomenal weekend. Take care.